Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In yesterday's market action, overnight we saw a sharp reaction to the downside, with the futures trading down below the 3,300 level, down to 32.91, and then began a reversal last night and continued into the session today, rallying nearly 100 handles off of the lows. We did see the markets retrace in the last hour of trading, but they were able to close up strongly on the session, even though they gave up a lot of gains. While it was a sloppy close, overnight we're seeing a follow-through as the markets are up about 0.5% on the futures, suggesting that the markets want to keep going higher. There's a lot of underlying positives, and the configuration that I've been discussing with the upward B wave continues to be in play, and I'll go through all those details here in a minute in the technical section. But as we look at the reports that came out yesterday, they were once again much better than expected, which is surprising because I've been expecting to see them miss, and they actually are coming in better. So ADP came in with 750,000 jobs. That triggered some optimism for the employment numbers coming out on Friday, even though there's not a good correlation between the ADP numbers and the employment report. We also saw the pending home sales come in up 8.8%, which was a blowout number, and the housing boom continues. And we're going to see this continue, in my opinion, as we go forward into the fourth quarter. So this will be one of the major driving forces behind the economy right now. We saw GDP come in at a minus 31.4. It was actually a bit better than expected of the minus 31.7 number. Not a big deal, but these were Q2 numbers. When they come out with Q3 numbers next month, we start to see those estimates. These are likely to be cut at least in half and maybe more, where we're going to be looking at a 15 to 12% minus GDP, which is still horrific, but it is showing that the recovery is continuing. As we enter into the new month and the final 2 days of this week, we're going to see the unemployment claims come out, expected to show a plus 850. As I've been talking about for the last several weeks, a number under 12.2 million on the continuing claims will be the significant number to watch for. If it's below that number, it will be bullish. It will also set the tone for an expectation for a better than expected employment number. So market participants will continue to look at this number, but everything will be focused on Friday's unemployment numbers. I'll go through that tomorrow night as we get closer to that report. The market sentiment has improved substantially, and it is likely to continue to stay positive overall. And then, of course, the last thing that I need to mention, there was a lot of talk yesterday that the Secretary of Treasury and Nancy Pelosi were talking about the stimulus, the $2.2 trillion of stimulus, which I have continued to tell you that they have to do this to keep the economy going. But we also know that this is posturing, and the fact that markets were rallying on that would really surprise me, even though there were a lot of stories floating around that that was the case. Maybe it was, but I find that hard to believe that anyone thinks that something will happen before the election. And one other report that was released yesterday that is worth mentioning is the Chicago PMI. It was expected to come in around 51.2. It came in at 62.8. This was another blowout number, as all of these numbers continue to come in better than expected. So as I've said before, no one really knows how these numbers are going to come out. The economy was so blown up by shutting it down that it's very difficult to gauge how it's going to come back. And most of the guesses are pretty good, but that's the problem. They're just guesses. But in spite of them being guesses, market participants are making bets based on these numbers. Let's go ahead and take a look at the charts, see what they're telling us for Thursday. As we begin the review of the WaveTech database, we did get some traction yesterday out of the rally. There was 400 new buy signals from the short-term models and 120 sell signals to set up a bullish tone on 1.2 and on 3.2. It is a positive rotation, but we did see an increase in the bullish percent up to 11.3, about 1% overall. So we're still under that 26% bullish number that I've been talking about for the last 2 weeks, and it looks like we may stay under that level, but a higher close today will start to trigger more material buy signals coming out of the system, and especially if it closes over some of the key levels that I'll cover in the technical section here shortly. But this will actually start to move this percent bullish up probably between 15 and 20%. So we could see this start to come off its lows and the extremes that we saw going all the way down to 8% last week. So this is going to be an interesting rotation to watch, see if we can get enough traction to start to signal that we are setting up a larger pattern that is likely to be bullish on the short-term level. Just a quick mention, remember on the Portfolio Expert site, if you're a WaveTech subscriber, the market grid now has expanded to about 70 symbols, so we're continuing to see the list grow as you folks ask us for trades. So make sure you look at the list. If you're a subscriber, let us know if there's other names that you'd like to see on here, including any indexes, ETFs that you might want to see on here. Beginning with the review of the S&P futures, I went through a lot of detail in the live stream yesterday talking about this configuration that's unfolding, this ABC pattern, and also going through the Fibonacci grid that I've got on the screen here. And we're going to continue to work through here. You see that we are now seeing a positive uptick on the overnight session, up 1475, up 0.44 on the session. And I'm still expecting to see us move up to this 0.618 line at 34.29. We will need to close above the 3384.5 level to signal that, but once we get a close over that level, the 3400 level will not be any real resistance at all. We should move directly up to there. And the correlation on the cash markets would be roughly a 3440 number. I'll cover that in the cash here in a few minutes. It's highly likely that the outside bar and that big range that we saw yesterday was the B wave. Now we're going to see over the next 3 to 5 sessions start to move up toward this number. As we've seen with the volatility levels as high as they are, these numbers usually come much faster than you expect, but the minimum should be 3 days, and it could take as long as 5. As the structure is revealed in this chart, we'll be able to tell whether there's an extension above that. I don't see us getting up to the 0.76 number, which is 3485. There's certainly a possibility for that. I will reserve that opinion until I can see more of the structure over the next several days. It will be critical in this pattern, however, that we remain above the 3339 level. If we continue to stay above that today, then we are likely to see a surge on Friday, which everything's pointing to somewhat of a bullish surprise or a bullish report on the employment numbers. And we'll see how that all plays out, whether the technicals are leading the way or not here. As we review the S&P cash, the same pattern is obviously on the daily S&P cash, but it does look like, as I mentioned, we have this AB. The structure ended up to be 2 bars, but it was intraday, and it was all set up to go down and fill that gap that is down here at 3306. But it didn't happen. So the gap still lies out there, which means that this almost confirms what I've been telling you, is that we're in that upward ABC and we're going to retrace again. The gap will probably get filled on the retracement, not on this particular pattern that we're looking at. It will be critical that we hold day before yesterday's low. I'll give you that number here in just a minute. But this pattern is likely to move up to that 0.618 number. It is 3442. That is correspondent with the futures number, which is 3429. So there's a little bit of discrepancy there, but the patterns are slightly different just because of the trading sessions aren't perfectly matched. So there is a little bit different, but the cash is 3442, futures 3429. So this pattern should unfold, and when it's done, like I've said, then we should get a ABC down, and it will probably be on this down leg that we end up filling that gap. And that'll possible certainly for it to reverse and go down and fill that gap at that 3306 level, but that doesn't look like it's likely, at least at the moment, and especially if we can get above that 3397, 98 level today, then we're likely to see this thing move over 3400 and move toward this upward range I just discussed. Next market we'll cover is the NASDAQ futures. As you can see here, I've got the market grid on the futures, and we're trading up toward yesterday's high, just like we are in the S&P. We're looking at an upward range right now toward the R2 level, which is 11,537. We've had a high of 11,477, low 11,375, just above S1. We're trying to do an S1, possibly R2 number. And the other number that's in this pattern that's important is that 40 period moving average that is slicing through here. Now this is the daily futures, which is at the 11,380 level. So that's going to be your support. We're trading, the low was right at that number, basically 11,375. And now we're printing up above that level about 80. Most likely this grid will stay the same. It may get, depending on how we close today, it may get a slightly upslope in the grid. Definitely looking at the higher end of the range around that 11,668 and potentially going to 0.618 retracement on the NASDAQ, which would represent a move to the 11,773. So this is going to set up the same pattern that we've seen on all of these charts. The ABC down with the corrective ABC within a larger B wave. Then we're likely to see this thing go right into the same patterns. I'm just sketching out this ABC pattern. This is what it looks like. So we should come up to 0.618, 11,673. The extreme right here is at the 12,036. I think that's a little optimistic. We should top out, maybe even trade between those two lines, but I don't think we'll hit 0.76 on this. Then just as in the S&P, we should start to see some sort of pattern unfold like this, which will represent the C leg. And all of these markets are going to go into these sideways ranges. I don't see some consolidation and we're just going up to all-time new highs. That doesn't appear what's going to be happening. It's obvious that a lot of the major stocks that are driving the market are also in the same pattern, and we're not likely to be screaming off to new highs. It's possible for us to go maybe to this 0.76 retracement, but not very likely to exceed that number. Just a quick review for the market grids on here is the futures market grid for today. The expectations for today would be a downside maximum 32.22. I don't think we're going to get close to that number, but the upside R2, R3, which is going, we've already printed through R2. Look at R3, 33.90. We could go as high as 34.06 and print above this 3,400 number. We'll see how this thing trades. I don't think that's going to happen ahead of the employment numbers. And the market grid for the cash market is similar. Expectation of S1, 33.54, and most likely an R2, R3, 33.81, 33.91, which would be a retest of yesterday's high, and the extreme today is 3,400. So there's going to be a fair amount of resistance at that level. Next market to review will be the US dollar. And the pattern that's unfolding here on a daily chart appears to be a potential corrective, upward corrective phase that is likely to unfold in an ABC pattern to the upside, which it appears to be completed. And what we're in right now would be an X wave. So this pattern here is A, B, C, and then this will be the X wave right here. And then we should get another ABC, and you'll see on the weekly chart, this will set up a move. I've got a little higher, probably in the 95 handle range, but the PPMs are still not at a robust phase, so this is why this uptrend that we've seen, even though you see the PPMs advancing down here at the bottom, they're still not in that trend phase yet. So we still got a lot of work to do, and this also confirms that we're most likely in this corrective phase here. So as we look at the weekly chart, you'll see this pattern. This is most likely just an A wave. We'll see some consolidation here and then move up. We also have resistance at the 21-day moving average, 98.99. That is coming down. As we look at the market grid, the 95.24 is R2. R3 is 95.57 and RXT is 95.87. So this looks like we're going to move into this range, and it's going to be a sideways pattern that will unfold down here. Ultimately, I believe we'll go up to this 97.05 level. The final market I'll cover tonight is gold, and gold continues to move up into the pattern, but now has hit the resistance at the 10-day moving average, which is currently at the 1897 level. The high so far today, 1901, so we've traded just above that. Current trading at 1899, up 4.5. So it is trying to challenge that. You'll also notice down below here that PPM1 is at a minus 0.26. So this level will supply a fair amount of resistance, but we are seeing PPM1 take out its first derivative, PPM2 take out its first derivative, telling us that we're likely to go up to a number that I've been talking about in the last couple of videos between 1917 and 1922. You can see that the 21 period moving average is at 1925. This is going to be the resistance point, but it's also starting to look more like a bottom finally in gold. And maybe that means that that pattern in the Dow I was just talking about, this X wave, will extend itself down and we'll see further weakness. There's still a lot of work to be done before we're going to set up for a major rally in gold. As we look at the weekly chart, I put up a Fibonacci grid just to get an idea of where it's likely to see resistance, and the 1906 level is a minimum resistance, and then the next level from a Fibonacci viewpoint is 1942. The averages on the daily chart will represent substantial amount of resistance, as I just discussed. It's still within the realms on an intermediate basis. The top end of the range would be around the 1942 level, a 0.382 retracement. It's also the top end of the market grid at 1940. So there's some correlation there. So that's going to be the extreme. The hurdles on this market on the upside are 1906, and then 1917, 1922, and then the ultimate would be the 1940, 1942 levels on the chart. On the downside, as long as we remain above 1862, we should continue to see this market move higher. So I had some issues with some of my primary charts I use every night. I had to rebuild some. Let me know what you think about this new layout that I use tonight, whether you like it or not, and see if we go forward with this. It looks really easy on my eyes to see, but please make a comment below and let me know what you think of this, or if you like the white charts that I normally use. I had a corrupted file, so I wasn't able to use them tonight. Thanks again for watching. This is complete the video. We'll talk to you tomorrow night.